In today's video, we're going to jump into 5 different areas of San Diego and give you some insight into what's happening into each one, but also give you some projections of what potentially might be happening into the new year, a few different factors that are affecting the current real estate market, and some things to look forward in 2024. So let's get into it right now. And as you're going through this video, if you guys are liking what you're seeing, you want to stay up to date with what's happening here in San Diego, feel free to hit the subscribe button. We're dropping new videos here every single week. And I'm Chris Erickson with the Beach Life Group. If you're thinking about making a move, you got some questions, you just want to pick our brain, you can book your discovery call right down below. And just remember, we got your back when making the move here in San Diego. So as we go through this, like I said, there's 5 different areas. They're all different price points. So we're starting with the lowest price point, getting all the way to the most expensive price point on today's list. And so you can see how everything is acting different in different parts of the market. The first market that we're hopping into is San Marcos, specifically the southern portion of San Marcos. So we're talking about Lake San Marcos, Discovery Hills, and San Alejo Hills. And so with each market as well, we're going to check out first the market action index, and then we're going to check out 2 other factors with the market. The market action index is going to tell us whether it's a buyer's or a seller's market, or if the market's heating up or cooling off. So it'll help us quickly see where prices are going to go in the future. If we are skewed way over to here, which we have seen in the past, it's a heavy seller's market, meaning sellers have the upper hand. If we're skewed way over here, we are skewing towards a buyer's market. So this is the most affordable area on the list today. So right now we're sitting at a factor of 62, which is still in the seller's market territory. So the supply and demand dynamics, meaning how many buyers, how many sellers are out there, there's still buyers that are scooping up properties now at a much less of a clip than we were earlier in the year, but there are still sales happening, but we are seeing some cooling. So you can see the market has been cooling off in recent weeks as homes are available and demand is less. In the next part, the next little line here, we're already seeing prices move lower as a result. So hopping into prices, the median list price, I'm just going to pop it to the 90-day average for smoothed out. So the median list price, this is for all active homes currently on the market in 92078. And it's going to correlate with what's going to happen in the future. So the current list price usually gives an indicator of what's going to happen or what the sales price going forward is. So any homes on the market right now or in the middle or beginning of December are likely not going to close till early January. But as we go through all this, keep an eye on the trends, because the trends are the most important things. The numbers are all going to be different, but the trends are important to keep an eye on. So back in December 2022, we were sitting at $1.3 million. As we started the year, we saw a significant drop going into mid-April, going down to 1.1. And then we had this big spike going into kind of the middle/latter part of the summer. So August and September went up to 1.5. Now you can see the trend. We are trending down a little bit, now sitting at $1.4 million. So this is going to show you that as new numbers come out going into January, the median price probably from month to month, so going December into January, is going to be less. And if we look back to December of 2021, you can see typically you'll see a little drop off going into January, and then it ramped up again. So it's kind of the trend we're seeing, where this is a little bit less significant than this year up here. But is this going to continue to go down or continue to ramp up? I think one big indicator or one big factor is going to be interest rates. They have been falling over the past few weeks, tracking right down towards that 7% mark, where we were at 8 just over about a month ago or so. If that goes into the 6s, if it goes into the 5s, this number is probably going to shoot up and there's going to be a lot more demand out there. If it stays above 7, I think we should see kind of a moderation of prices, but I think that's going to play a huge factor on what happens here in San Marcos. And hopping into inventory, this is how many homes are for sale compared to last year. We had 48 in December. Now we're sitting at like 19. So you can see the number of homes is way less. So if we did get an influx of buyer demand, that would cause prices to rise. Now, if we get an influx of homes coming on the market in the new year, which is potential right now, with pent-up seller demand I think we have out in the market, we could see this number go up. If we have elevated interest rates, keep buyer demand a little bit low, and pent-up seller demand, so more homes come on the market, we could potentially see prices moderate a little bit even more. So right here, typically rising inventory will typically favor buyers, while tightening inventory will favor sellers. So less homes on the market, less competition out there, with more buyers equal prices going up. Now the next price tier, going to Carlsbad, the most affordable area of Carlsbad, 92010. How is the market up there? You can see we're in much less of a seller's market than in that previous 92078 zip code. Part of the reason is price points are higher. With interest rates being higher, the purchasing power of buyers out there goes down. So as prices rise, there's less buyers in the next tier of homes for sale. And there's been an even more dramatic cool off from last month to today. So the market has been cooling over time and prices plateaued for a while, but we are still in a seller's zone. But here's the story here with median list price. So we did peak out in November of 2022 right here at $1.7 million. We did have a drop in the beginning part of the year. And then we've just kind of tracked a little bit sideways. So we don't see that drop off like we did in San Marcos yet. So going into the new year, likely see prices kind of stay in this range as far as where we will go for 92010. And this chart is a little bit jumpier because there's just not as many homes for sale in 92010 as with the next one. It's a bigger portion of Carlsbad. Yeah, we do have more homes, so just more data. But last year, as far as inventory levels, we were sitting about 13 in December. Now we're sitting right about 8. So this is for detached homes. You might find some condos in there as well, even though this section doesn't have a ton of condos, but we are still much lower. So anybody searching in 92010 has likely seen all of the homes on the market right now, but the trend is sideways as well once again. So we did have that dip in May, and then since then we've just been kind of up, down, haven't seen much gain, and we have not seen much decline as well. Now, in one of the bigger zip codes of Carlsbad, 92009, we're talking about the Lacosta and that kind of area. Market Action Index is on par with 92010, so Calavera Hills up to the north. But last month, where Calavera in that kind of area, the last month's number was much higher. This one's basically, we've had a slight decline, which you would expect kind of going into the latter parts of the month, but not as dramatic as we did see in that northern zip code. So the market has been cooling over time and prices plateaued for a while. So the same description on this one as well. But you can see the Market Action Index starting in August and trending down. You can see it's been on a downward slide ever since then. And once again, part of the reason is interest rates during that time were rising significantly and quickly. I think a lot of times the change in interest rates has affected buyers more than the actual number once they have gotten used to. So last year, that number was 7%. I think the new plateau or the new benchmark has been 8% as we drop down into 7%. And once we see a 6 handle on that, that could definitely ramp up some demand. And here's an interesting one. So we are actually above where we were in November of 2022/December, where we did see that peak going into kind of the summer months here, did have a little decline with interest rates rising, but the trend is still going up. So it goes to show you that different areas, even within the same cities, can show different trends. Will that trend continue going into January? So we could expect prices to be up a little bit in January. Since these numbers are highly correlated with the future sales price of homes in this neighborhood, you could expect that January number to be a little bit higher. And then with all of these, one thing I did want to point out is going back to like 2019, 2018, where we're seeing in December, 87 homes. We're seeing, what was December back here in 2019? 63 homes. And then you could see we've been in this new pattern of much, much lower inventory, much, much lower number of homes for sale. 31, we had 22. We did have more last year, which was 46 than this year. Once again, we did see inventory build last year because of that 7% interest rate. But this year we've flattened out, sitting about 36 homes in that 92009 zip code. And it's the same story as all the rest. So the price points are that next tier of price points where we're sitting at that $2 million price. If interest rates do affect these neighborhoods, just like all of the rest. So if interest rates moderate or go lower, we could see demand come back. If they kind of stay elevated, but we also see more homes come on the market, that's when you could see a little bit of a price reductions, because a simple supply and demand game, more homes, less people trying to buy the homes would equal prices going down a little bit, more buyers out there, less homes on the market, then you're going to see prices go up like we have seen in the past. So we're really keeping a close eye to see what happens because interest rates have been fluctuating so much. And over the past few years, like we mentioned, the sellers out there have just been waiting and waiting. And we've been in conversations with people who have waited for a few years. And now they're like, well, is now just the time? Like, should we just sell coming into that spring market? And one thing to remember as well, most times when people sell their home, they also become buyers as well. So unless they're moving out of state, they also drive that buyer demand, but they're also adding a home. So adding inventory onto the market. So it's kind of a wash where in the last few years, we just haven't had the sell/buy as much as we had in the past to create some more of those homes for sale. Now we're hopping into Cardiff, and you may have seen as the price points have gone up, these numbers down here have gone down, especially from that 92078 zip code to 92007, which we're in right now. Still a little bit less, trending less than last month. So last month we were in more of a seller's market in Cardiff than in this month. So the market has been cooling off a bit in recent weeks as homes are available and demand is less. So now we're in the median price point about that 2.6 range. And this is a different story as well. So in Cardiff, obviously, the number of homes for sale is not as much, which you'll see in the inventory. But as we saw that spike in price points in the middle part of this year, now we're seeing a downward trend of homes for sale. So we're not seeing that flattening. We're not seeing that little tick up that we have seen in some of the past zip codes. Now we're seeing a trend down, meaning future price points are likely going to show that the Cardiff home prices have gone down a little bit. And you can see it's a little bit choppier, like I said, because there's not a ton of homes for sale in Cardiff. Anyways, it's a smaller zip code here in San Diego, but compare last year, we were sitting at 10 homes for sale. So we actually have 12 homes for sale this year. So the inventory, the number of homes is a little bit more, but we're still nowhere near where we were in the past, sitting, around this time at 25 homes. So we're sitting about half as much that we did see in previous years in like a normal time. I'm calling like 2018, 2019 normal time. But with the median list price dropping, we still see kind of a sideways movement in the inventory levels here in Cardiff. And now we're in Rancho Santa Fe. And you guys know one of the highest price points here in all of San Diego. And that story just continues to be shown where we're actually in that buyer's market territory. So typically, this area of San Diego is in a buyer's market in some capacity where days on market are higher. You're working with that higher price point. So homes sit a little bit longer. So here's a trend line of market action index. We're never crazy high where some of the earlier zip codes, this is just tracking through, averaging through the year. So back in the peak, it was just sitting shy of 40. We did peak again in 2022, just shy of 39. So now we're sitting right about 30. So that bar up here never got up into this range here where we did see basically all those other zip codes, maybe not Cardiff as much, but most of those other zip codes where these numbers were, in the super far right in a heavy seller's market. Like I mentioned, this zip code is typically not as crazy as those other zip codes. So while the market action index shows some strengthening in these last few weeks, so I don't know if you could tell, but it might be like a tad bit up, but prices have settled into a bit of a plateau. Once again, it's Rancho Santa Fe, so price points are going to be a bit higher, but let's see where they are trending. So you can actually see the price points, December 2022, 6.8. Now we're sitting at 6.7. So just a little bit under where we were last year, but from mid-July, trending up, which is interesting, right? As we have seen in other ones have trended sideways, have trended down. Rancho Santa Fe is actually trending up a little bit. And inventory has been relatively flat for the past few years. So this December, 70 homes, 2022, 68 homes, 2021, a little bit less, 60 homes right there. So let's just call it in normal times, December of 2019, there was 183 homes. So even out there, the number of homes for sale is significantly less. If you guys want your zip code breakdown, or you're down south in San Diego or east or whatever it might be, drop a comment below. We can do a breakdown right here. and let you know what's happening in your neck of the woods. As always, if you have some questions as you watch this, you're like, I'm thinking about moving in the new year and I just want to get that ball rolling, start that conversation. Well, right down below is our link where you could book a discovery call, hop on and get all of your questions answered. I'm Chris Erickson with the Beach Life Group, and we got your back when making the move here in San Diego.